Well, hello and welcome to Sansad TV. You're watching our brand new program, Viewpoint, hosted by me, Frank Rausen Pereira. A show where we will take a closer look at crucial issues pertaining to international relations, the economy, polity, governance, society, public policy, law, and much, much more. We'll give you the big picture and put things into perspective for you. Let's get on with today's program. Well, the global trade landscape has dramatically shifted following the announcement of extensive tariffs by US President Donald Trump earlier this month. The immediate effects were felt in global markets, leading to a crash on Wall Street, Dalal Street, and other indices as well. Economists warn that these tariffs could trigger a global recession, particularly impacting the world's poorest economies. President Trump declared a series of tariffs starting with a minimum of 10% on imports from all countries. Specific countries faced even higher tariffs of above 50%. India, meanwhile, faces 26% tariff rates in addition to a baseline tariff of 10%. President Trump argued India subjected the US to 52% tariff rates in contrast to Washington charging almost nothing for years and years and decades. In this edition of Viewpoint, we will analyze President Trump's Liberation Day tariffs and their implications for India and the world. Joining me on the program today are Rudra Kumar Pandey, international trade and commerce expert and partner at Shardul Amarchand Mangaldas and Company, and also Jayan Das Gupta, former ambassador, World Trade Organization. Thank you to both my guests for joining me on this edition of Viewpoint. Ambassador, let me start the program with you first. Let's first try and understand and put things, into perspective as far as the tariffs and what it means for India first, and then we'll look at what it means for the rest of the world.
Well, the tariffs, President Trump had two very clear objectives in imposing tariffs, which he had been mentioning ever since his campaign days and from much before. If you look at an interview of President Trump when he was just a real estate magnate in 1988, he speaks of raising tariffs as a way of attracting investments and setting the American economy on a path of growth, high growth. So it has been something which he has been obsessed with. The two objectives that he had while imposing the tariffs are as follows. The first one is that investments, if you raise the tariff wall, investors from all over the world will come and set up base in the US, that is in manufacturing. So that will create jobs. So that is the first thing. The second objective is, of course, that the US has been taken advantage of by other countries which charge high tariffs for the US. So US manufactured products can't be exported to their shores, whereas they can easily export to the US because of low tariffs. So the second objective is to have a level playing field, quote unquote, so that the US products also get an equal opportunity to be exported to different countries.
Absolutely. Yes, so these are really, the points that President Trump has been wanting to drive home, and that's what he has done. He has gone ahead with reciprocal tariffs, and let's see what kind of an impact it really has on globalization, on trade, and the global trade order as well. But in the meantime, the markets have reacted around the world, and the markets don't seem to be very happy with these tariffs. Rudra, let me bring you into the picture now. How do you see this panning out over the weeks and probably even the months to come?
Thank you, Mr. Pereira, having me. In terms of the impact on the market, I mean, there is a knee-jerk reaction, and of course, that is also bound to happen because there are level of uncertainties as of now in the market. Because you see, as per the news report, there are $25 billion plus order book lying with the Indian companies. So the key question is what will happen to them? I mean, how the Indian exporters is going to export. I mean, I don't know, also you're keeping an eye, but there have been a push and a lot of export happening of the already manufactured goods before the actual imposition of the tariff happens in the next 2 days. So lot happening around, and of course these uncertainties will have an impact, and the investors are not very clear. The global supply chain need to be realigned. The investments which are in pipeline, including for India, need to be relooked at it. So I think there is a situation where everyone need to keep an eye, take a considered decision, so that it is a win-win situation for everyone. So long as India is concerned, I think there is some benefit. It is not a bad situation per se. Even the Commerce Minister has said that probably in a better situation we are, as initially it was thought so that India is going to be impacted heavily. But the if you look at the approach of the Indian government, they reached out to the U.S. government proactively. There has been an engagement. The U.S. Secretary Suzanne came into India. A lot of messaging was done. So I think to some extent India is in a better situation, and of course will have an advantage in few sectors. But I think what is currently being reacted is a immediate impact. So everyone need to realign, and we need to have some time to digest every situation and this entire change, and probably we see the real result. So let's wait for a week, 10 days, what will happen.
Let's use the wait and watch approach and see how things pan out in the immediate near future is the point that is being made. Ambassador, let me come back to you now. As far as India is concerned, of course, a lot of talks have been going on about these tariffs, about how we need to react, what needs to be done. There is also the talk about, a bigger trade agreement being put into place. How do you see all of that panning out, and what sectors do you think are going to be impacted the most as a result of these tariffs?
Well, the sectors which are going to get hit the hardest are engineering goods, which rely a lot on iron and steel, and to a certain extent on aluminium, which have already been subjected to tariffs. And many products which are made of steel and aluminium have also been slapped with the same 25% duty already. But India's flat rate of duty would be 26%. So engineering products will get hit badly. The second thing is that because of the imposition of tariffs, the costs of imported products in the US will go up. So non-essential products like, for instance, polished diamonds, studded jewelry, gold jewelry. Now, these are things which, are purchased only if there is substantial disposable income. Now, that is likely to get affected. It is a very large basket of products which we export to the US. That is going to get hit badly. The third thing, which is of course not all that large, it is just over $1 billion or so, is leather. Because other countries like Brazil, for instance, or Ecuador, which are also large leather product exporters, have not been slapped with equivalent duties. So that is some thing which we'll have to bear in mind. As far as pharmaceuticals is concerned, we have got a temporary reprieve. It is under review, but it is most likely that pharmaceuticals will not get slapped with a duty of 26% or whatever. It will remain at the current levels. This is because of 2-3 reasons. One is that a large part of the pharmaceutical exports which we effect helps in providing medicines under the Medicare and Medicaid schemes of the US. The second is that the Veterans Administration, which is funded entirely by the US government, again, provides a lot of medicines which are sourced, generic medicines are sourced from India. So that is another thing which will stand in the way of the imposition of higher tariffs. So pharmaceuticals, we will continue to enjoy the low duties and export. Textiles and clothing is another area where we may have some advantage, but not a very pronounced advantage, because the kind of garments which we make and which are being made by China, Vietnam, and Bangladesh are of two different natures. They produce bulk garments, basic garments in huge numbers, which we cannot do because of the structure of our industry, which is based on an average factory size of about 800 to 1,000 workers, whereas in these countries, the average size of the factory is about 10,000 or more. So we can't get the slack that will appear in the market on account of their vacating the space. So that is, but we will gain some advantage because of the tariffs, higher tariffs on these countries. Mind you, Vietnam has already said it has been slapped with a 46% tariff, and it has already offered that it will reduce all duties on American products coming into Vietnam to zero.
Right.
And Taiwan has also done a similar thing. So there are these initiatives which will take place over the next fortnight or so, and we will see where the ball rests. But the bottom line I wanted to mention is that there would be a huge recessionary pressure.
Absolutely.
And inflation is already rearing its head in the US. The presidential, I think, inclination is, of course, he has said that he will not interfere with the Fed, but he wants the bank rates to be lowered so that bank credit can flow and people can buy more. But because of inflationary pressures, the Fed would perhaps raise the bank rates. So that is another thing which has to be borne in mind.
Absolutely. Absolutely. I'm going to come back to you on this, about the about some economists talking about the possibility of a recession and the kind of impact that it's going to have on the US, and then as a result, a cascading effect on the rest of the world as well. But before that, Rudra, let me bring you back into the picture, and let's take up two aspects. One is, what does this really mean for globalization, and where are we headed as far as the free trade order is concerned? That is one aspect. And the second one, of course, is, tariffs have been slapped even on nations that the United States has trade agreements with. In fact, higher than, some of them have been slapped with tariffs higher than India even. So what sense does it make to go ahead with a trade agreement at the end of the day?
See, I will not be able to comment on the impact of the trade agreement with other countries. But at the same time, I must comment on the first point, the change in the global order. As I already mentioned earlier, that there has to be a realignment of the global supply chain. What will happen is then anyway, all of us in the discussion was China plus policy, or expansion to be done outside China. India is looking to have those supply chain. They are aligning the entire policy to that effect, to make in India, make for the world, which is including the PLI scheme, which has been a big support for the manufacturing sector, and recently announced the electronic goods sector, PLI, which is very welcoming. So I think what will happen if you look at few sectors, and if I need to talk about like semiconductor, electronics, and also telecom products, I think there will be a surge of investment in India, because if I look at for the Taiwan, the tariff is high, for US products. So that, and also for that matter, Indonesia and Vietnam. So I see a great opportunity for India to invest in those segments. That is also aligned with the policy of the government. And the good part is that the government of India, as per the news report again, tomorrow or in a day's time, the Commerce Minister is meeting the exporters to understand the gravity, what support they need, what strategy should be there to renegotiate their terms with their, to their customers. So all those things are in works as of now. At the same time, as I said, in terms of investment opportunity, the BTA will play an important role. India, in fact, there's a request from the exporters and the Commerce Ministry that if they can hold on this tariff on India until the conclusion of the BTA. Of course, unlikely that will happen. But if we are expecting that BTA to conclude in next 6 months, we will see at least India and US has agreed to work together in the technology space, in innovation space, also to work together and also work with the few countries to realign on the technology front, innovation front. I mean, because a lot of dependency today is on China. So those are already in discussion. Those will be need to be realigned, and we expect a lot of supply chain alliances to be done with U.S. company. It is not only that everyone is going to invest in US. Of course, that is the intent and objective. Mr. Trump want everyone to come to US to invest as well. But there will be also realignment in supply chain. Like there are some other routes available. Indian companies will also go global to invest and to export. So I see a lot of changes. I mean, and therefore I see, as I said initially, that it's a wait and watch mode. All of us need to wait. We need to understand the gravity. But at the same time, India, out of all this tariff imposition, is having advantages over other countries. And with the policy initiative and the government support, we can play an important role where India is already at the situation. We have to play an important role beyond the geopolitics, actually.
Absolutely. Beyond geopolitics, we need to look at these opportunities and put our best foot forward and also provide for the world is what is coming out of this particular discussion. All right, Ambassador, let me come back to you now. There are some reports, you mentioned in your opening remarks about why President Trump went ahead with this. He's talking about manufacturing within the United States itself. These tariffs now, there are several estimates that suggest may create about 1.5 million jobs, but may take away another 4.5 million jobs as well from within the United States. So your thoughts on that first, and the kind of impact it's going to have with regards to recession and therefore an impact on the rest of the world.
Well, I would tend to agree with those economists who have said that the inflation, if allowed to continue for more than 6 months, is going to have very serious consequences. Joseph Stiglitz, for instance, has mentioned that this is just the wrong kind of medicine for the perceived problem or illness that President Trump has suggested or has imposed. So recession is very much on the cards. The positive side is that there have been protests from common people. Of course, there could be a political angle to it also, but in about 1,400 places in the US, there have been protests yesterday, against the Trump action. And there have been also protests in Europe. And the Chinese have also, I think, raised their tariffs. In the first stint of President Trump, they blocked all soya exports, and they also retaliated in other areas. Now, that led to a lot of distress among soya farmers in the US, because soya exports from Brazil and Argentina went up to China. So as a consequence, soya prices in the US crashed, and it caused distress. So that is the kind of thing which is most likely to happen, that instead of creating jobs may get taken away. Of course, at the moment, the White House has said that the job scenario looks very good, and there is job growth, in fact. But that can, plateau and then start declining over the next few weeks. So my take would be that unless this is corrected, some mid-course correction is taken by President Trump on the advice of, economists who have studied trade much more than, if I may hazard, Peter Navarro, who's also under attack from Elon Musk. Elon Musk has attacked Peter Navarro, the chief advisor to President Trump on trade and tariffs, saying that there should be an FTA, in fact, between the EU and the US and Canada, Mexico. It should be between North America and Europe. And tariffs should come down to zero. So that is the kind of thing which business would want to have. Big business would definitely be pushing because of the bloodbath that has taken place, as you mentioned, not only on Wall Street, but elsewhere in the world as well, including in India. So if these tariffs continue for more than 6 months, then there will be recession starting from the US, but very soon transmitted to the rest of the world.
Absolutely. All right. It's time to get closing comments now from both the panelists with the best way forward and what next and how do we prepare going into the future. Starting first with you, Rudra Kumar Pandey.
See, my take is, I think with this change and what India has to offer, we can contribute a lot in terms of the manufacturing segment. What India has been not able to achieve is the value addition in India. With this, change, India can realign. Policies are already fit for that case. The government is willing to hear from the industry to further add on to the policy initiative, work with them. And India could be hub for the value addition, find the right partner. I mean, already India has a strategic partnership with Japan. Taiwan could be next, a greater partnership we can do with Taiwan, also with Korea. And then we can do a value add for the entire segment of manufacturing and supply chain for the globe. And could be a win-win situation for India.
Absolutely. And Mr. Dasgupta, please close the show for us with your concluding remarks.
Well, I think this is a wake-up call. For one thing, that we can't really rely on the US or any particular country or a single country or a group of countries. We have to diversify our base. We have to export to as many countries as possible, as many items as possible. The second thing is that we need to set our own house in order. And we have, of course, been talking of reforms, and a lot of reforms have also taken place. But if you look at the investment climate in India, even domestic private investors are not investing in manufacturing in India. They may be investing in the share market, but it is not flowing into manufacturing. And similar is the case with foreign investors. If you look at the past few years' track record, they have been investing in mainly services, not in manufacturing. So there is a very real problem in manufacturing, and that is what needs to be addressed in concrete terms. Otherwise, we will not be able to be Atmanirbhar Bharat or reach our goal of Viksit Bharat by 2047.
All right. With that, then, we'll have to call it a wrap on this edition of Viewpoint. Thank you to my guests for joining me on the program and putting things into perspective for us. What's coming out of this discussion is that we need to see a major realignment as far as India itself is concerned if we want to achieve our goals in the near future as well as our long-term goals. There is an opportunity for India. We need to put our best foot forward. We also need to ensure that we set the ball rolling and move in the right direction. Engineering services are going to be hit the most as a result of President Trump's tariffs. A recession could be on the cards if the tariffs continue beyond 6 months, and the recession will start with the United States and have a cascading effect on the rest of the world as well. So this is what is coming out of this discussion. With that, I'll call it a wrap. See you again next time.
To watch more programs of Sansad TV, subscribe to our YouTube channel and don't forget to like and share them.